Here we are, guys. So this is the ETF panel. I thought I would open up LaValle, president of CoinDesk, Indices data. I thought I would open up and talk a little bit about some ETFs that have been pretty impressive. The inflection point a couple of years ago was obviously the Bitcoin ETF getting over the finish line in the U.S. market. And I think we modeled out kind of what we thought the market was going to see and experience. I thought kind of a two-segment event probably be about $40 billion in AUM that came in, but we were wrong. I think it's been quite a bit more. We've got some speed panels here to talk a little bit more about the ETF market. But let's go down the line, introduce yourself, your firm, and maybe what you're principally focused on, and then we'll kind of get into that, guys. Absolutely. All right.
Nick, I work at BlackRock. I look after the iShares business for Asia Pacific. I think it's safe to say I'm extremely focused on ETFs.
Yeah, Stephen McClurg, I'm the CEO of Canary Capital. Our primary focus is actually hedge funds and active management, but we also have a very large crypto ETF suite in the U.S.
Higgins, international CEO, what is now with Prime, previously Higgins Road, and the main focus of our business is prime brokerage, margin financing, digital asset.
So obviously we have a great series of perspectives here with our panelists. I want to start by talking about kind of ETFs as a distributed vehicle that ultimately has ecosystems that get created around them. And much of the time you think about them as retail investors, which they really are, but they're institutional adoption tools as well. So I'm going to give you the first shot here. Talk about the ecosystem that has grown around ETPs and your perspective both in the APAC market and also globally.
Sure. So we launched our digital asset ETPs in January of 2024. And the growth of those products has been unprecedented in the ETF world. The AUM of Bitcoin product currently stands just shy of $80 billion. That makes it the fastest growing ETF in history. The second fastest ETF prior to this took 8 years to reach that level of AUM. So if you talk about ETFs being a vehicle for access, I think it's clear that for this asset class, the vehicle was an incredibly efficient way for to improve adoption in the ETF space. But I want to point out, even though the products are U.S. listed, it's not just a U.S. story. So a significant portion of the assets that sit in the U.S. listed crypto ETFs are from Asia clients. We have an additional benefit here, an additional tailwind, is that there's actually been a boom in ETF adoption more broadly in the region. More and more investors are choosing the vehicle to express investment views, not just in digital assets, but in equities and fixed income and commodities. So we've really had the dual tailwind of the adoption of this asset class and a broader adoption of the ETF wrapper in the region. So much so that actually of any investor that chose to invest in a crypto asset out of Asia last year, there's a 95% chance that they chose us to express that exposure. So it has been literally unprecedented, right? It hasn't happened before.
Yeah.
And I think to just expound on that a little bit more, it's not just the growth, it's actually the breadth that I think has surprised us. So by that, I mean the breadth of the client base that have started to adopt these products. So it's all the way from retail investors to family offices, high net worth individuals, private banks, hedge funds, all the way to large institutions and endowments. So it's not just a case of one investor segment being eager to invest in the product. What you're seeing is it's providing access to a broad swath of investors, which I think really speaks to its utility.
Right. So, Mike, Ripple Prime, absolute forefront of offering prime services for crypto assets, right in the middle of ETFs being launched based on crypto assets, and you guys really providing a high quality service to the market. Talk a little bit about that, and also the ecosystem that you've seen being built.
Start with XRP ETF. It was I think the fastest to get to $1 billion, which is good testament. But just double clicking on a little bit what Nick said. I think the growing demand for ETF has kind of reframed the way investors are thinking about this and their approach to crypto, meaning The prior access was really speculative, and now it's more regulatory participation into traditional portfolios, and that's kind of a game changer. And a couple, other data points. When you look at last week, even a down market, you saw 10 billion of flows going through. If you look at options on IBIT, when it first launched, it was 73,000 contracts in the first 60 minutes. Last week traded 2.33 billion with 900 million of premium. So these are truly institutional products that folks are getting behind. A little more on the geographics from how we see it. Certainly here in Asia, you're starting to see some growth locally. You're going to likely get ETFs in Korea. Japan a little bit behind, but I think ETFs will be the start behind structured products there. Continental Europe, ETFs and ETPs have been a mainstay. On XRP side, there's several that the AUMs between 100 and 300 million. These are pretty relevant. And then the U.S. As an American is a very, very, very equity-centric market, right? And so taking these digital asset tokens and putting them into a regulated, acceptable equity format was truly kind of the last step for broad adoption. So from the PB lens, and we'll talk more about this, but we see the need for financing against the ETF and sec lending, very familiar stuff that we all grew up with in traditional markets, and applying those same practices and principles to digital assets.
And the funny thing about it is, it hasn't even happened yet. That's like the hilarious part. We're like barely in the first inning. Stephen, what are you seeing from that perspective?
Well, we're pretty excited. The last iteration, the last firm I founded was Valkyrie Investments, that was on the forefront of a lot of the Bitcoin-related ETFs, such as Bitcoin Futures, 2x Bitcoin, Bitcoin Spot, Bitcoin mining companies, and that was pretty successful. We sold that company, and a lot of us started a company called Canary Capital, which launched the first XRP ETF. And again, it was fascinating to watch the amount of inflows coming in day one in a down market. By the way, I believe this cycle peaked in October, and even though the market was down, we had $58 million in day one volume and over $250 million in day one flows. Which is incredible. It was actually the biggest ETF launch of 2025, and XRP continues to perform very well. Even on the biggest down day last week, we had a large amount of inflows.
Yeah, it was about 39 million came into the XRP,
incredible,
which is impressive. Given
it's crazy, and so it goes to show that Bitcoin's been around for a long time. It's a great asset. It's the most well-known crypto asset. But I believe that 2026 is really going to be a year for utility and adoption. What's the functionality of a lot of these blockchains and tokens? And what we're seeing is the protocols that have high functionality are the ones that have the most institutional interest, such as XRP, HBAR, which another one, HBAR, the guys at Bloomberg said, I've never even heard of this. What is this? And day one, it was $50 million of AUM. So we're seeing, anything with a lot of functionality, utility, high adoption. We're seeing a lot of inflows on the altcoin side as well as Bitcoin.
So I'll just to kind of accentuate the point of getting 50 million into your ETF in day one. So I think 1,100 ETFs launched last year, and less than 3% of them had more than 25 million in AUM at the end of year one.
Well done.
All right, so when you get 50 million in day one, that's a screaming success. So
crazy.
Yeah. So let's talk a little bit about the infrastructure, Mike. What have we learned from TradFi? What are we seeing with the infrastructure being built out? And your perspective is probably the best to start, but
sure.
But give us a look.
I'll do it through the lens of a prime broker and the role that we play in the space. But effectively, just to describe what we are as a prime broker, we do one thing, is we provide access to really two things: access for institutions to trade across the entire ecosystem, right? Whether that be spot, perpetual swaps, futures, options, certainly securities like ETFs, and even the DATs. And the second is access to a balance sheet to trade across all of those in a capital and cost-efficient way. So that's our role in the market. Specifically on the ETF side of things, I'll do it from two lenses. First is the buy-side consumer, and so you have different strategies. The simplest one is a basis trade. Buy spot, sell CME front-month future against it. Folks that can't hold spot for many reasons, the ETF is a great way to get exposure to the spot asset. And so in our world, I see somebody long ETF, short CME future, and you provide cross-margining and margin finance. So real utility against that security. And because it's a security, it's easier to get a pledge against under account control agreements than Bitcoin and held in different custodians. You're talking about BNY and State Street and names that we're all very familiar with and a little more comfortable with. So a lot of utility there. The other side, which hopefully we'll get into, is around the liquidity. And so with all of the success of these ETFs, you have the ETF issuers that need to go and have all these creates, right? And somebody needs to go and buy the Bitcoin or buy the XRP and several others. And so somebody needs to finance. In the traditional markets, you have the banks, prime brokers that finance that. And so the role we play with Ripple and Ripple's material balance sheet is to be able to finance those end users for these successes to continue to happen. And so that's a really important part as we start to see more names go into this state, as we start to see probably index and maybe a mix of traditional markets and digital assets. The liquidity piece via prime brokers is important. And as maturation happens in the space, you'll get other names to come in. Traditionally, we're known as the banks to do it, and doing that against securities is a lot easier than native crypto, at least at this stage.
Yeah, I would supplement that by saying that when the Bitcoin ETF got approved, and it was begrudgingly by the SEC, essentially the acceptance of that by the SEC was we're going to throw some sand in the gears of the whole thing to just make it a little bit more difficult to actually do. So the concept of, cash create, redeem only, pre-funding, exactly. These are things that were material problems for the market that, Ripple Prime was in a really strong position to be able to support. So and the numbers got really big really quick. So
it's can I come in? Can I just overlay?
Yeah, I was about to.
That's just such a critical point that I think is overlooked quite a lot, is that one of the reasons that you've seen such interest from institutions in the ETF is the, frankly, operational reason that they can actually buy it, right? They can actually transact in it.
Yeah.
It's part of their existing ecosystem, and so it is fundamentally an access product. That's what broadens the investor base. And when you get a broad investor base, you get people doing the ARB on the security, for example, right, versus the futures, rather than just having one client archetype, retail, trading it. That's when you get days like Friday, which you alluded to.
Exactly.
$10 billion traded on the exchange. The actual primary activity was less than $100 million. So there's $60 million of redeems versus $10 billion of secondary market activity.
Yeah.
That is a diversified investor base.
That's a healthy market.
That's a healthy market.
So
right?
unpack that. So the point that's being made here is that oftentimes everyone says, the liquidity of the ETF can never be greater than the liquidity of the underlying asset. It was something that we looked at in ETFs with fixed income instruments. The reality is that we can exchange massive amounts of risk in the ETF shares, and nothing is being touched in the underlying assets. So you've got, kind of a ratio between what's trading the secondary market and what's trading the primary market and the underlying kind of tokens, which is
and that's one of our
healthy.
Primary metrics across all of our ETFs, right? For ecosystem health, and to see it in an asset class like crypto and Bitcoin is incredible.
Yeah. Well, given a good example of how this, and this relates to crypto, I was involved, and I'm sure some of these other guys were too, in the early days of fixed income ETFs. And one of the primary benefits of that was, if you're trading fixed income, your spreads are really wide unless you're doing it in a lot of size. So a lot of financial advisors, they would pay a very high spread in order to buy bonds. But then once you put those bonds in an ETF, that spread shrank to like a penny on the exchange.
Yeah.
Crypto is the same way. It's still a very much of an OTC market where you're not. It's not automatic trading. You are picking up the phone and calling if you're doing any kind of size. So it is very OTC, and the spreads shrunk a lot in the ETFs. I mean, most ETFs for the larger tokens anyway, it's a penny spread. Which, if you were to trade it, you're talking about sometimes as much as, 50 basis points
or 200,
or more.
or 200 basis points.
Or 200.
Yeah. So the benefit to the investor is really actually quite massive.
So,
But maybe let's kind of shift from what we have done today or what we're happening right now and what we've done with fixed income in the past. Although I could talk about fixed income ETFs forever.
Same.
It's like so much fun.
Different panels.
Different panel, different conference. But let's
one shout out to gold ETFs. The gold ETF that launched here a few weeks ago has been an incredible success, and so it's taking all of these types of assets and putting them in security wrappers. It's the demand that we all know. We can book, we can pay taxes on them. Everybody.
I know.
Cool.
I know.
Yeah.
Speaking of gold ETFs, by the way, you mentioned 80 billion in assets.
Yeah.
So obviously we've had some downturn in the Bitcoin price, but it took 11 months for IBIT to get to 100 billion. It took gold ETFs in aggregate 16 years.
Yeah.
That's true. That's like math.
Yeah.
Anyway, looking forward now. What's next, Stephen?
Well, look, what I'm really excited about right now is certain altcoins in the market. Bitcoin obviously was a massive success. So was Ethereum. And what's next? We've now seen XRP, we've seen HBAR, Solana, Litecoin. All of these are high functioning, tokens with a lot of utility. And there's a lot of good protocols out there that have a lot of promise. Some that may not have a lot of activity at the moment. They have the promise of that because they might be faster, more secure, be utilized for things like tokenization and stable coins. One of the really interesting functions of some protocols right now is data storage and data verification. There's some that are really transitioning to the world of AI. And there's a lot of tokens out there like, oh yeah, we're the AI token on blockchain. I'm like, that really doesn't work. But if your protocol is actually storing and verifying data for usage of AI, now that's really important. That's strong utility. So we've, in addition to having 4 ETFs in the market in the U.S., we've got 8 more on file that we believe have very strong utility, very strong interest. And and the beauty, of course, of the current administration in the U.S. is that a lot can get done in crypto right now, including the launching of various ETFs. Now, there are some requirements, and the current requirement is what's called the generic listing standard, which means that, essentially if there's a futures market in the U.S. that's ISG, they're ISG members and CFTC regulated, then you can have a ETF for that token. And a lot of people see that as a hindrance, but I see it as a good thing because most investors or sophisticated investors want to hedge their positions. And if there's not a futures market, they're not necessarily going to be a buyer. So we want a strong futures market before we launch an ETF to make sure that you can hedge and you're going to get more inflows because you've got more protection.
So Mike.
Can I jump on the back of that?
Yeah, jump in. Go,
just
please.
launched 3 new tokens, right? Cardano, Stellar, Chainlink, like exactly what you're saying. So I think what's next is, sorry, I cut you off, Dave. Is that the question?
No, I was going to say what's next, but from your perspective, because not.
I got to piggyback on what was already said, but certainly I agree. Like these are the criteria to launch new products, and so I think you're going to see more of those. I think access is going to be key. This is a digital conference. So I do think that you're going to start to see these things get tokenized. And what's the value of that, right? Collateral mobility, to be able to use these as good collateral and shift those around 24/7, I think is a really, really important piece. And so from the lens of a prime broker, if somebody posts collateral to me and it's a security and I can underwrite that collateral, I can set appropriate haircut, then I can give financing for other activities out there. And so I think that's the utility of this asset is really important. It's the same like gold, tokenized gold, why that matters. I can put it in DeFi and I can get yield on that, or I can use it as collateral to trade everywhere else. So I think the world is inexorably moving in this direction. And right now you have 2 worlds. You have a digital world where you need to on-ramp, i.e. get a stable coin, sell that stable coin into said asset, and you have a fiat world. And the ETF stuff we're talking about today lives in this other world. As those start to move over there, then the question is, do you need to come out of this digital world where you can trade all these products. And so we're in the very, very early stages. I'm a baseball guy. We're probably first or second inning, but I see a lot of innovation, and I see baskets of this stuff as well.
And I'll take a slightly different angle, but I think it's just as exciting. Is you alluded to the derivatives market in some of these crypto ETFs, right? Well, if you look at other asset classes and how ETFs in particular serve those asset classes, as soon as you have a derivatives market and a product, you can structure solutions around that product. So if you look at the
100%.
structured products market in Asia, for example, and this is not theoretical, right? In the last 3 to 6 months, we've started to see crypto ETFs be used as building blocks to create structured products, from structuring desks to private banks, to be sold on to high net worth individuals the exact same way that equities are and that any other asset that has volatility is, right? So in a lot of ways, the spot crypto ETF is very much just the beginning, right? What you can build on top of that. And if, you alluded to ETFs that were launched in the US last year. Well, a tremendous amount of those ETFs contained some sort of derivatives overlay.
100%.
Right? So, as the first step, you provide the ETF as a building block for structuring desks to utilize and pass on. But it's not a big leap then to actually create what we call outcome products, right? Whether they generate income or downside protection or accelerated growth over the top of these spot ETFs to create the same offerings that are available in equity and fixed income. They're coming in commodities, which was not historically a very volatile asset, but now, so it really is the earliest of innings, I would say. And all of that adoption leads to the maturation of the ecosystem and the maturation of the asset class.
Well, the importance of structured products, I mean, and it's already happening, by the way. There's already bank and retail structured products, which are sold by financial advisors for Bitcoin. I actually just saw the first insurance product that's indexed to Bitcoin, and that's really important. And the next step is institutional investors. So after you get retail and then financial advisors in, 80% of capital is actually institutional, which is beyond that. And insurance is probably the most important. And the problem with insurance companies is, in order to hold things on their general ledger, something like Bitcoin, it would be a 30% capital charge, meaning they just have to sit in cash for 30%. That means that Bitcoin has to outperform, over 30% outperform the market in order for that to matter. But when you can start building structured products, insurance structured products, now they don't have as high of a capital charge, and they can actually access the asset class via that product, which is what the ETFs are the basis of.